PayPal reported better than expected quarterly financial results this morning, but the stock price fell by more than 8% anyway. So, what's the deal with that? I'll share the details from PayPal's latest quarterly earnings release and explain why the stock price is still down despite the better than expected results. I'll also update my buy recommendation for PayPal stock. Remember, I've had PayPal stock rated as a buy all year long here in 2025. I also had it rated as a buy all year long in 2024. I'll let you know if I still think this stock is a buy, especially on this lower price here. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
PayPal's management team was happy with the results and they raised their guidance for the full year, saying, based on our momentum, we are raising our full year transaction margin dollars and earnings per share guidance. So the company came into this year expecting a certain amount of earnings based on what they thought was going to turn out in 2025. And so far this year, things have turned out better than expected. So PayPal is letting investors know that profits are going to be better than what they told us they were going to be at the start of 2025. I always like to hear that when the management team comes back to investors and informs us that the year is going to turn out better than they indicated it would. So some of the highlights from the second quarter results: net revenues increased by 5% to 8.3 billion. Operating income increased by 14% to 1.5 billion, and earnings per share increased by 20% to $1.29. These are much better than expected numbers for the company that said that they're focusing on profitable growth. So they deprioritized growing the number of accounts just for the sake of growth, and they focused more on attracting the kind of users that will be the most profitable for PayPal longer term. But it wasn't all good news for PayPal in the quarter, despite the positive tone management is taking. I think investors saw beyond that. Payment transactions decreased by 5% to 6.2 billion, and the payment transactions per active account on a trailing 12-month basis decreased by 4%. So these were a couple of downside events here for PayPal. Remember, PayPal benefits most when people are shopping online and buying goods online because it's more convenient and people feel more secure using PayPal when they're shopping on a new website. They don't have to take out their credit card and input the information on a new website. Just saves time if they accept PayPal. You just click PayPal payment and it goes through. You might not have your wallet with you in your room where you're sitting. You might not want to take out your credit card and type in all that information. And so if they accept PayPal, you just click it and you log in and you make a payment. That's PayPal's biggest competitive advantage, in my opinion, is in those online transactions where it substitutes for using a credit card. Still, in the most recent quarter, people were spending less money because of the tariff impacts. Businesses were increasing prices. People were spending more money on services instead of spending more money on goods. And that's bad news for PayPal. And unfortunately, I think in the near term, those consumer trends will continue. These tariffs are going to result in higher prices for goods in the United States. So people will likely, on the margin, spend more on services instead of goods. And that's going to be a near-term headwind for PayPal. That being said, longer term, I expect an increasing share of shopping to happen online. And that's very positive for PayPal. Shopping online is just so much more convenient than shopping in person, and that's never going to change. The trend is only going to accelerate, and PayPal stands to benefit from that shift in consumer behavior over the next few decades. Now, one positive trend I've been watching closely, and it's improving nicely for PayPal, is active account growth increased by 2% to 438 million year over year. On a sequential basis, it increased by 0.4% or by 1.7 million. Now, this is even more impressive because the company's been focusing on profitable accounts, right? So it's not like the company is just going out looking for any account it can sign up, spending a lot of money on customer acquisition without paying attention to the value these customers are going to bring back. management has said they're focusing more on profitable accounts. And so the account growth is now more meaningful since management's strategy has focused on profitable growth. It means each one of these new accounts is a valuable account, an account that's likely to deliver more long-term value compared to the customer acquisition cost to acquire. In another downside element, the company's cash flow from operations totaled just $900 million and free cash flow of $700 million. Typically, PayPal generates a significantly larger percentage of its revenue turns into cash flow from operations, but as a result of some buy now, pay later transactions and receivables and the timings of payments, this cash flow from operation was much lower than usual, and that was another reason keeping investors away from PayPal stock in the current quarter. So as the management team highlighted earlier, they did raise their full year 2025 earnings per share outlook. Previously in April, they told investors they were going to deliver earnings per share between $4.80 and $4.95. Now they're updating that guidance, saying that they're going to deliver earnings per share between $4.90 and $5.05. So that's above the higher end of the guidance they provided in April. They now provide guidance that's about 10 cents above that point, and that will compare well to the $3.99 they delivered last year in profitability, so about a 25% increase in earnings per share for PayPal. I thought this was a really good quarter. I am a little concerned about the cash flow from operations decline. That was my biggest concern from this quarterly earnings release. I was happy to see the number of active accounts increase by 1.7 million. That was a lot more than I was expecting. I was happy to see revenue growth in 5% and operating income growing much more than that. So overall, I was happy with the results. So looking at my proprietary discounted cash flow valuation model for PayPal, my intrinsic value per share calculation has the stock worth $119 a share, and following the price decline after the earnings today, it's now trading at $71 per share. To update my recommendation on PayPal stock, I had it rated as a buy, and I last updated that on June 9th. I will go ahead and update that again today on July 29th, reiterating my buy recommendation for this company. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.